Well, oil prices moving slightly higher as investors continue to keep a close watch on the conflict in the Middle East. This comes as Secretary of State Antony Blinken efforts to quell ongoing tensions. For more on oil, we're joined by Rebecca Babin, CIBC Private Wealth U.S. Senior Energy Trader. Rebecca, it's good to talk to you today. You saw Inez, or you heard Inez, kind of lay out the path ahead for some of these big oil players. How are you looking specifically at oil right now and where the supply-demand dynamics are likely to move?
Yeah, so she brought up a couple great points, and the first is U.S. supply growth. I think when analysts are looking at 2024, there's two numbers they're least confident in. The first is China demand, which they're very concerned is going to undershoot. And the second is U.S. supply growth. In 2023, we saw the U.S. really outperform most analysts' expectations on supply growth based on better efficiency, better use of capital, longer laterals. So when we look at 2024, and we're hearing this from the companies, they're expecting supply to continue to grow, but it's at a slower rate. And if the U.S. grew 1 million barrels of supply last year, they're looking at something like 400,000 to 600,000 barrels of supply growth coming out of the U.S. this year. So that is really a key number. We got burned a little bit last year thinking supply growth would be capped in the U.S., and they were able to kind of pull the rabbit out of the hat and really outperform. So I think there is an expectation growth will slow down. But if you think about where analysts are looking at crude and looking in that very finely balanced market of 1.3 million barrels a day to 1.6 million barrels a day of demand growth, and a very similar amount of non-OPEC supply growth, they're looking at the U.S. as a potential to continue to outperform there. It's really a tricky market in terms of nailing down those numbers. But I think most analysts are pretty confident that the market is well supported in crude, fundamentally kind of around that $70 a barrel in WTI. But they're very closely watching what's happening in China and what's happening with U.S. supply growth.
So then, Rebecca, you mentioned staying in this sort of $70 range. Do you think then oil prices have peaked, barring sort of any big movements, or as you mentioned, the China factor here?
I actually don't think they've peaked. And here's the thing. Everyone seems to be very focused on these downside risks, U.S. supply growth, China demand, and really kind of taking their eye off the ball of there are a couple things that could go right for crude this year. We could actually see demand outperform. And if you look at the demand numbers in 2023, they consistently were revised higher from the weekly data that comes out from the EIA. So we could continue to see this kind of worrying yourself into a lower market, but then seeing demand come in stronger. The second thing I'd say is we do have the SPR being refilled. They've been more active this year. There seems to be a commitment to continue to be active, and we have a very disciplined OPEC, which I think will absolutely extend their cuts through the first half of 24, and maybe even throughout the whole year if they need to. So I actually think the market should be trading closer to 75, 80. I think we probably see 80 as we get closer to summer when the balance is starting to tighten up, and the market is overly kind of worrying themselves on these downside risks on a day in and day out basis.
Rebecca, I do want to ask you about what we're seeing specifically on LNG since the Biden administration announced it would be pausing new licenses on LNG terminals. A lot of pushback, as expected, from the energy space. We've got a hearing on Capitol Hill as well. How much of this is warranted in terms of the concern? What does this ultimately mean for supply? It doesn't necessarily mean that current sort of terminals will be canceled immediately. This is more of a forward-looking issue.
Yeah, so I think you bring up a great point. In the short term, this isn't a huge market impact, and I think that's reflected in LNG prices and the way you've seen companies react. It does start to have an impact when you look at 27, 28, 29. And I think the crux of this is how we view LNG. Is LNG a transition from fossils to clean, which most people think it is, and a key component of that transition and a very necessary build out? Or is it kind of that dirtier energy supply that we want to kind of get rid of sooner rather than later? I think if you look at our allies and who's importing the most LNG, we're looking at Europe and Asia, they would argue they need that LNG to be built, those projects to be built in the latter years. And I think the pushback there is warranted from both we need it as part of the transition and we haven't exactly, made energy security a priority, and that's something that will likely come up as we head closer into the elections, as energy security will be a topic. So in my view, this is something you need to watch 100% as we look further out, 27, 28. But in the near term, I don't expect it to move LNG stocks that currently have projects on tap. So, absolutely a hot topic, not necessarily market moving at this time.
And Rebecca, also, I want to talk about some of the rerouting that we've seen around the Cape of Good Hope and, of course, the Red Sea as well. What's that doing in terms of product supply and who's really benefiting from this as you look at the sector?
So the beneficiaries of this are really the tanker markets. They are seeing an increased amount of demand as everyone reroutes, or 50% of crude and product shipments are rerouted. That's really spiked clean product tanker rates. That mostly impacts diesel prices going into Europe. That's where we've seen the most sustained impact on pricing. For crude oil, it has had an impact. It's a 12 to 20 day additional route around the Cape of Good Hope. But really, yeah, you're seeing the beneficiary in European diesel, tankers, and to a very much lesser extent, somewhat in crude oil. I think in crude oil, it's maybe $2 to $3 in terms of what we're seeing in price associated with that rerouting. So when we think about what a ceasefire looks like, that's why there is a big debate about how crude will react. Many will say, well, there's hardly anything baked into it. I don't think that's totally true, but it's certainly less than we've seen in the product markets and much less than we've seen in previous geopolitical events. So the tankers are where I'd really be focused on if we do see an actual ceasefire.
Well, I do appreciate you joining us with your insights, Rebecca Babin, CIBC Private Wealth US Senior Energy Trader. Thank you so much.